Hello everyone and welcome to the channel. My name is Brent and in today's video we're going to be doing our stock market weekly recap for the 19th through the 23rd of April 2021. This will be week 16 changes where we're going to go ahead and quickly take a look at last week's changes up on the screen now. We'll cover the indexes, silver, gold, bonds, the 10-year yield, current mortgage rates, and a couple of current events for this past week, and also going into this upcoming week as far as what we posted here on Facebook. So with that said, if you are brand new to the channel, have not yet subscribed, go down below, hit the red button to subscribe, make it gray, hit the bell to be notified every time we release a brand new video, and of course give this video a thumbs up, make it blue, and let's go ahead and get into the video. Okay, so last week's changes, week 15 from the 12th to the 16th of April, we had a pretty positive week. The S&P 500 was up 1.37. It was the best performing index last week, and that was because of utilities, REITs, and healthcare. I think were the three main areas last week that pretty much helped pop it up. You can see here, utilities were up around 3 to 4% range. We had Pfizer pushing up over 5%, and a few other positions really solid within healthcare and utilities, and also some REITs. Also, silver, gold, and bonds were performing really well. Silver was up 2.93, gold up 1.9, bonds were up 0.3%. 10-year yield remained the same at 1.73, and mortgage rates dropped from 3.32 to 3.27. So it did drop by 5 basis points last week. Now, let's go ahead and look at some news that I want to go ahead and share with you guys for this week. So we have a ton of earnings that's coming up this week here this is last week. So this is last week's earnings that took place. Let me know down in the comment section below. We're looking forward to anything specific. I had kind of checked into a few. I don't hold a whole ton of positions that had earnings last week, but I know that this upcoming week was pretty positive as far as what I had purchased. I saw Tattoo Chef dropping down into the $15 range. So this is a stock that I had been watching on my watch list. We purchased a number of their products. They're an expanding business. They're continuing to expand as far as products and as far as locations and availability. And once they had dropped down into that $15 range, I decided to buy it at $15.99, which I think I posted a couple screenshots up here. Yes, I did. And then Dogecoin. I see a lot of investors and my friends jumping on the Doge wagon as far as buying it up. It's only a couple $100 that they're putting into it, and it is making some sort of return. But, I am looking to invest in a couple different cryptocurrencies. And I'm just still going through the process of writing them all down. I like to put things in an Excel sheet. Give me the reason of why I'm buying them. What do I do on the back end? That's solving problem, whatever. And then as far as the Tattoo Chef goes, I think when I purchased it down at $15.99, it had a current valuation of a $1.3 billion, and it still has about $200 million in cash and equipment as of back in February 22nd. So this makes up 15% of Tattoo Chef's market cap overall. It does have $2 million in long-term debt, but if you look at the $200 million as it does have in cash and equivalents, the debt is basically non-existent, and they're continuing to grow their business by so much. Here we have about 38 different products that's available. Here in 2021, they are up to 62 total ones, and they're still unveiling another 24 right now. So I know over at Costco, either way, not a lot of downside here, down 0.46%. We can see the NASDAQ down 0.25%. So essentially, a lot of these were essentially flat. S&P down a little bit, but not so much. The Russell 2000 positive by 0.41. So I do believe that all the indexes this week coming up are going to be hit a little bit more than what we saw this past week. Then we have cryptocurrencies. Right now, Bitcoin is trading basically at $53,000 right now. It had about 7.31% change to the upside. Ethereum is at 2483, XRP at 1, and we have Cardano at 120. Look at Dogecoin, that took a hit. It's down to 0.27 now. Litecoin, 43 as well. So I'm kind of looking at Bitcoin at the moment as far as, I still have to look at where I have another friend who's pretty invested into Bitcoin, and he always looking at it at the with the Fibonacci numbers, and their cryptocurrency is so hard to value it overall, but it does follow trend lines. So that's something I'm going to go ahead and get with on Monday to take a look if Bitcoin and other coins are worth buying into at this moment, or if they have more weakness to them. S&P 500 movement for this past week. This is the 1 week performance of the S&P 500. Now, right off the bat, we can see here that some of the more positive sectors were again still in healthcare. So we have down here Medtronic up 4.2%. We have Edward Life Science Corporation up 9.47%. We have Boston Scientific Corporation 4.45%. The Danaher Corporation, that is not one I've ever heard of, but we can see here that the healthcare and diagnostics and the medical devices were pretty positive. We also saw AbbVie up 3.2%. We also discussed that I did sell AbbVie at $110. That was just a limit sell there. Johnson & Johnson up 2.2%. We also see a continuation of REITs being positive. That's pretty interesting that real estate investment trusts are continuing to climb. Now, some of the bleeders out here, you can see some pretty bright red colors. See Kimberly Clark down 5.11. Altria. So regardless of Altria, this upcoming week on Thursday, it may have some pretty good earnings, but it may also have some pretty bad earnings. And recently during the week, I forgot which entity had announced it, but they're trying to limit just how much, not tobacco, but it is what makes it addictive, how much can be within their products. And nicotine, I think it's nicotine, that's it. I'm not a smoker, never have been, so nicotine, they're trying to change how much nicotine can be inside of their products overall. So that affected Ultra, down nearly 10% there on the week. Netflix down 7.5 numbers. They missed on their subscriber numbers. That caused their stock to fall by quite a bit on the earnings day. Tesla down 1.4, Amazon down 1.72, Home Depot, Facebook. I think these are really looking forward to earnings. So Amazon, Tesla, Facebook, those are kind of waiting. I don't know if Amazon released their earnings. I thought Amazon may have had it, but not one I was. No. They have earnings this upcoming week. So back on this picture, I'm pretty sure that Amazon, I may have missed it, but I was pretty sure Amazon, right there, on Thursday, Amazon has earnings. So I think a lot of the big names here, they're kind of just waiting for earnings. Apple, essentially flat, up 0.12. We also saw some red up here. We have Micron down 5%, Nvidia 4%, Intel little over 8.5%, and Oracle down 5%. So overall, there's a lot of mixed sectors out there, but you still have some pretty good movement within the real estate investment trust, healthcare, and beverage and non-alcohol within the consumer defensive area. We can see both Pepsi and Coca-Cola are pretty positive there. Jumping over into oil, it is down 1.69%, whereas we see Exxon and Chevron both down there over 1%. So this week, I think last week there was a disconnect. I think we saw Exxon and Chevron negative, but oil was positive. This week, we see oil negative, and we see Chevron and Exxon negative as well, kind of in line there as far as movement. We also see the dollar hitting almost near 52 lows. Their 52-week low is at $89, I believe. So if we hit the 1 year, we can see here that they had $89.87 back in early January. So right now we're at 90.76. So the dollar is continuing to get weaker. We may see the dollar continuing to drop down into the $89 point this week, but time will tell if that happens. Silver and gold are both positive this week, just a little bit. We have silver up 0.17%, still down year to date by 1.79. Gold positive by 0.03, but essentially, flat on the week, still down by 6.71%. We have bonds here up 0.23% on the week, still down year to date by 3.14. Bonds there. I don't know a lot of investors currently investing in silver, gold, or bonds as of late 2020. Let me know down in the comment section below. Are you investing in any bonds at this moment, trying to build up some sort of a padding? So if there is any volatility to the downside, that your portfolio won't suffer as much. 10-year mortgage or 10-year yields. I don't know if this thing's updating. I remember last week this was -0. I don't know if these numbers are actually changing. If it is, I'm not seeing it. This is showing 10-year yield remaining the same at 1.73. And we have mortgage rates. The 30-year fixed mortgage rate fell 6 basis points. So last week it fell 5 basis points to 3.27. This week it fell 6 basis points from 3.27 to 3.2. So that is the current events. There are a few other areas that I did want to kind of discuss really quickly before wrapping up this video. Now, over on our dividend growth investing group here, I went ahead and took a look at the Dividend Aristocrats list for, this was early January 2021, but it remains pretty current for us here in April. So there are 65 Dividend Aristocrats that are out there that have grown and paid out dividends for the last 25 years or more. Of these groups, we have Hormel Foods here. Hormel Foods is currently having a lowering earnings per share trend line, but because their earnings per share is trending to the downside here in the short term, it is offering a price near 52-week close here. So we have $46.39. Not quite down in that $44 range. So this could be one to keep an eye out. If you do see its earnings per share start to recover in the future, this one is still offering a nice starting yield over 2%. Generally, Hormel Foods does pretty well, but I believe with new organic foods that are coming in here, Beyond Meat, Tattoo Chef, and others, I think that they're kind of disrupting Hormel Foods a little bit, just because it was an area that maybe wasn't as heavily, not a ton of products within it. Now, if you go to the grocery store, there's a ton of food products, and I don't know if we have much Hormel food. When we go to the food, we're pretty conscious about what products we're buying, and I don't know if we actually use any Hormel foods, but just one to kind of toss out there, that it is trading near 52-week lows, but there's a reason for that. That's because their earnings is sinking. But if you do see recovery, go ahead and take a look. Kimberly Clark, we just talked about their earnings here. They released their earnings. They missed by quite a bit on their earnings per share and on the revenue. That drove the price down hard here on Friday, down to 111. That gave Kimberly Clark a 3.29% starting yield. We can see that they do have decreasing earnings per share that basically drove this price near 52-week lows. So if it does start to recover in the future, you see a couple quarters of positive growth, maybe keep an eye on it prior to that. Or if you are a long-term buyer of Kimberly Clark, again, this could be a really good opportunity to buy and dollar cost average if it does continue to fall. Now, one that didn't make sense to me was Clorox. Now, Clorox here, I took a look at this one. Clorox is trading with earnings per share at record highs. Now, when I had posted this, I went and read a little bit more into them, and Clorox actually had earnings on Friday And that's what drove this price down here in the short term. But over this past year, we had a good upside potential. We can see that the earnings had been growing quarter over quarter. This isn't great. This is actually down a little bit here for this quarter, but their price for the year is trading near 52 lows. Now, I posted the exact same data in this group and a couple other dividend groups. And the reasoning for that is just because Clorox had such a high demand back in 2020 with their Clorox wipes, all their sanitation, because of what was going around the world and still continues to go around the world, that it really bumped up their earnings. But this whole mess, what's going on in the world, is still not behind us. It is still affecting countries all over the world. It is affecting the entire world right now. And that, in the short term, their earnings did get hit, I believe. I'll go ahead and have an article here. But over the long term, this could be a really good opportunity because their price is trading near 52-week lows of $176.73. They offer $4.42 as far as annual income per share. That gives them a PE ratio of 19.74. This is a bit high. Say they drop down into the 15, down into the low 80s or even the 170s. I feel like that would be a really good opportunity to buy, but I probably will nibble a bit of Clorox here on Monday. Price to sales is at a 3.21, so as their price comes down into the 70s, if it does get there, that'll drop their price to sales probably down into the 3s. Now, their 5-year change as far as revenue, up 39.6%. That's good. Over a 5-year period, that's 40 divided by 5. That's an 8% return growth on their revenue per year. Net income, nearly 90% over the past 5 years. Cash flow up 128, and their earnings per share is up 93.71. So, to me, Clorox looks like a really good opportunity at this moment, but it did get downgraded recently by JP Morgan, I believe it was. Yeah, JP Morgan downgraded Clorox to a price target from 205 to 196. So they're at 188, so that's about, not exactly 10, but pretty close to $10 difference. So Clorox did trade a little bit lower, and I thought it had something in here as far as their go. So they put Clorox from 196 to 105, it's that as a whole. And we had Bank of America drop their price objective for Clorox from 245 to 235. So that would be a pretty interesting number. If Clorox got up to 235, 245, maybe their earnings hadn't dropped. I think they just were downgraded just because of how much growth they saw early on in 2020 with the demand for their products, that they are anticipating that their earnings may come in a little bit slower now that everything is behind them. But I think that we're still not out of the woods, and Clorox will report numbers. So I still believe that Clorox looks like a really good opportunity at this time, and it is kind of trading near those 52-week lows. And the other one here is ticker symbol MK. This is McCormick. I think I saw another investor kind of discussing this one. This one isn't trading near 52-week close, but its earnings per share is growing as well. So its earnings per share is growing. I posted this one because it's not trading near close, not trading near 52-week highs. It's trading right in the middle. It is offering a pretty low yield of 1.42, but because it is offering a starting yield pretty high for the 1 year at 1.42 versus the past, I wanted to go ahead and share this one as well. Could be one worth researching further, but if not for such a low yield. So if you don't mind the yield being down in the 1% range and you're interested in potentially having a growth dividend company, this could be one to look at. So that is all I wanted to go ahead and share with you guys here today. So that is going to be it for this video. Let me know down in the comment section below. Are you interested in any earnings that are coming up this week? Let me know down in the comment section what day you are most interested in, and let me know what stocks you're interested in as far as earnings go. And that is going to be it for the video. Thank you all for tuning in. If you guys have any questions, drop them down in the comment section below. Again, if you are brand new to the channel, go down below, hit the red button to subscribe, make it gray, hit the bell to be notified every time we release a brand new video. And of course, give this video a thumbs up, make it blue, and I will see you guys in the next video. Bye-bye.